AT&T has its widest dividend yield against the 10-year in more than 3 decades. Still, some trades are betting the stock falls to start 2021. AT&T hasn't had the greatest 2020, and 2021 may still get worse. In this video, we will check AT&T stock price prediction 2021. Number 8. Where are analysts predicting the stock will be in 12 months? Firstly, across the board of 25 Wall Street analysts, the company is currently averaging a hold rating. According to MarketBeat data, the average 12-month price target set by analysts is $32.48 a share. This is an upside potential of 6%. Interestingly, the average 12-month price target has dropped 10% over the course of the past 6 months. These price targets are from larger institutions, which allows the investor to understand what smart money is saying about AT&T. Wells Fargo & Company. Analysts at Wells Fargo reiterated their underweight rating and price target of $25 a share. Credit Suisse. Analysts downgraded their 12-month price target from $33 to $31 a share. Credit Suisse has a neutral rating on AT&T. Bank of America. BOA analysts reiterated their buy rating on AT&T, with their 12-month price target sitting at $36 a share. Morgan Stanley. Analysts decreased their price target from $38 to $36 a share. Number 7. Stock price forecast. The 24 analysts offering 12-month price forecasts for AT&T Inc. have a median target of $30.50 with a high estimate of $38 and a low estimate of $16. The medium estimate represents a plus 3.79% increase from the last price of $29.39. AT&T expects 2021 revenues to grow at a rate of 1%, falling short of analysts' estimates of 1.4%. AT&T's posted fourth quarter earnings of 75 cents per share that came in ahead of analyst estimates of 73 cents per share. The company's revenues were impacted across most of its business segments due to the COVID-19 pandemic, particularly Warner Media and domestic wireless. AT&T's domestic wireless service revenues generated $14 billion in fourth quarter 20 and were negatively impacted by lower international roaming revenue. Domestic wireless net additions stood at 6 million in the fourth quarter. See Tstock analyst on tip ranks. AT&T CEO John Stankey said, "We ended the year with strong momentum in our market focus areas on broadband connectivity and software-based entertainment." Analyst reactions to the fourth quarter results were mixed. MoffettNathanson analyst Craig Moffett reiterated a sell rating with a price target of $24 on the stock. Moffett said that AT&T is moving towards growth over profitability, but in doing that, it is also bumping up against and through the ratings agency's leverage ceiling. The analyst believes that the company's leverage is too high for a shrinking company. Meanwhile, Oppenheimer analyst Timothy Horan reiterated a buy rating on the stock and a price target of $38. 2021 guidance was in line with our estimates, with flat revenue and EPS as well as FCF of $26 billion on $21 billion of gross CapEx. Negatively, T will likely sell DVT at a 20% or so FCF yield and use this to buy $20 billion of spectrum, Horan wrote in a note to investors. Wall Street analysts are cautiously optimistic about the stock, and the consensus is a moderate buy, with 5 analysts recommending a buy, 4 analysts suggesting a hold, and 2 analysts suggesting a sell, including Moffett's sell. The average price target of $31.20 implies 7.1% upside potential to current levels. Number 6. No growth. Analysts currently estimate revenue for the company will grow to $173 billion in 2022, from $170 billion in 2020 and $172 billion in 2021. What may be worse is that estimates have fallen considerably over the past year. At the end of 2019, analysts saw revenue growing to nearly $183 billion by 2021. Earnings growth is expected to be more pathetic, too, rising to $3.30 in 2022 from an estimated $3.16 in 2020. AT&T is trading at a huge discount to its historical earnings multiple. It gets worse because AT&T has a dividend yield of 7.3% with a 10-year Treasury rate of roughly 95 basis points. Number 5. Betting the shares drop to start 2021. It is probably why some traders are betting that AT&T falls in 2021 from its current price. On December 30th, the open interest for February 19th, $27, $28, and $29 puts each increased, in order by 26,619 contracts, 31,079 contracts, and 47,573 contracts. The $29 puts were bought for around $1.70 per contract. The $28 puts were bought for around $1.10 contract. And the 27 puts were bought for around 70 cents per contract. It implies that the stock is trading lower by the middle of February. Number 4. Technical weakness. This, from a technical standpoint, doesn't seem that far-fetched. The stock is currently consolidating around $28.50 and forming what appears to be a bear flag. If the stock falls below $28.25, it is likely to fill a technical gap created around $27.50, which should act as modest support. Based not on the relative strength index's momentum, it seems reasonable to believe a drop to $26.60 is on the way. The RSI has been trending lower, and like the stock price, it too has been consolidating. It still needs to fall under 30 before signaling the stock has become oversold. Overall, it suggests lower prices lie ahead. Number 3. AT&T stock. Wireless subscribers additions top estimates. AT&T said it added 800,000 postpaid wireless phone customers versus estimates for a 414,000 gain. A year earlier, AT&T added 229,000 wireless postpaid subscribers. Wireless service revenue rose 7.6% to $20.1 billion, topping estimates of $19 billion. The company's entertainment unit continues to struggle. AT&T said it lost 617,000 premium pay TV subscribers, including its DirecTV satellite business. Number 2. Sales on DirecTV business expected. Despite its 7% dividend, AT&T stock dropped 26% in 2020 as investors focused on its high debt and management changes. Other high-paying dividend stocks may be more attractive for income-oriented investors. The telecom giant is expected to sell all or part of satellite TV broadcaster DirecTV, which it acquired for $49 billion in 2015. AT&T bought Time Warner for $85 billion in 2018. While AT&T has aimed to reduce debt, it was one of the top bidders for a government auction of G5 radio spectrum, analysts say. AT&T stock holds a relative strength rating of only 7 out of a possible 99. Number 1. Conclusion. AT&T stock forecast has both arguments for the bulls and the bears. The positive opportunities arising in 2021-22 look to expand AT&T's long-term revenue growth. Evidently, the analyst's 12-month forecast for the stock remains conservative, with the upside potential averaging below a 10% return. AT&T faces plenty of near-term challenges, but I believe its dividend is safe and its stock should recover as the longer-term tailwinds kick in. In the third quarter, revenue attributable to its entertainment segment, which includes DirecTV, was down by 10.2%. Despite that significant drop, management noted that it would have grown its overall top line year over year if not for the effects of the pandemic. However, the real long-term opportunity for AT&T lies outside of its media-related properties. 5G technology will open up new ways for AT&T to monetize its wireless network, ranging from autonomous vehicle connectivity to lightning-fast video streaming. Do let us know in the comment what your thoughts are about AT&T stock. Please subscribe to the Stock Advisor. Thanks for watching.